Morning, everyone. It's Thursday, the 4th of December, 21 days, 3 weeks till Christmas. Christmas came for the developers yesterday. We had the CER come out with a new set of permanent exit arrangements, and we have come up with a easy to digest chart here. In effect, what we're talking about is once a developer, under the safeguard mechanism, there are fixed contract arrangements. And under those arrangements, there was requirement to deliver the carbon. And if you didn't, you needed to go out and buy the carbon and deliver it to the government. Now, there are a whole heap of projects out there that haven't quite met the expectations of the project, which has meant there's some big financial liabilities. Now, what the government's done is they've said, okay, we don't want to dislocate the market. We don't want the price to go to $75 because there's a lot of underdelivered carbon. And if you pushed it all into the market at one point, you'd have some pretty exciting market action, which is, as a seasoned trader, that's the kind of stuff we live for, but it's not going to come. And what they've done is they've taken all the feedback and they've done what a regulator does, and they've regulated how to deliver this out going forward. And the way they've done that is they've said, you need to deliver 25% of the volume to us, minimum, right? So if you can't deliver 25%, yes, you're gonna have to go to market. Now the balance, you can get a 60% discount fee, right? So they're saying, actually, you still have to deliver something to us, but we're giving you a big discount. So it's probation. It's not get out of jail, it's probation, and it'll be on your record, is really what they're saying here. So the kind of obligations we're talking about on a mark-to-market value around $2 billion, face value of what's being delivered, the actual 25%, half $1 billion. These are not big numbers in totality, in reality, but they're big numbers in a market which is pretty niche. And the current supply of the market, so let's say there's 40 million units being held in accounts. They're not available for sale. They're being held for future liabilities, right? So there's not a lot of available liquidity. And so what we saw yesterday was a quick blip up to, market was trading 35.80. We saw a quick blip up to 36.30, and then it traded back at 35.70. I think we'll see more action today. We'll see what's happening. But ultimately, what we're talking about here is a market which is looking for clarity, certainty. This provides it. And I think the market's short, and I think we'll probably look to base out around these levels. And there's still a few developers out there are going, well, it's better than what the worst case was, but we've still got some stuff to work through. Where are we going to get these credits from? So you only need to pay it when it comes due. So it's not all happening today, but it's a short liability that exists in the market. That's what you need to know. Have a good day. One other thing. The Climate Markets platform will be launching today. So if you go to markets.climate.com.au, you can log in, you'll get your free version. And then on top of that, if you want more information, more volumes, more data, more timeframes, more tools, the stuff which you would probably need over time, there are 2 upgrade options. The yearly option of $1,500 a year is about a 30% discount to the monthly option. And look forward to your feedback. We hope the tool is useful for both free and paid users. So leave you that. Cheers.